Good evening, everyone. Welcome. Today we're going to be chatting about one of my favorite ICT based strategies that is completely rules based. And I use this on a daily basis to trade US 30 and Nasdaq. Now, it has a really good risk to reward ratio of about 2.5. You can sometimes push it for 5 risk reward. However, you must remember that the higher your risk reward, the lower your win rate will be. So I prefer to take it for about a 2.5 risk reward ratio. Now, without further ado, let's hop into the computer and I'll show you exactly how to trade this ICT based mechanical trading system. Right, so we are on the Nasdaq chart, and as you can see, guys, I have these dotted lines. Okay, now these dotted lines represent midnight New York time. In order to get this, you must click on indicators, type in midnight, and look for this ICT midnight NY and GMT. It is by Liku. It has 106 likes or whatever that means. It's this one. Click on it, add it to your chart. You will see it pop in at the top left corner. You then click on settings, switch off the GMT line, and just leave on the New York midnight line. Okay, you can make it whatever color you want and click OK, and then you'll see these lines appear, and that's going to mark out your days. So now you'll see this here is one day and this here is the next day. Okay, and then there will be another dot when today ends. Okay, so let's have a look at a trade that I took on Monday and a trade that I took on Tuesday. Now, this is Tuesday, the 21st of February 2023. Yesterday, I actually called it on my live trading session on TikTok. We all took it together. And then we had a trade on Monday as well that worked out really, really well. So here's the trade on Monday. Now, the first thing that you need to do to trade the strategy is you need to mark out the daily high and the daily low. Okay, so that is your step one. Now, how do we do that? We simply look between these two lines where the day starts and ends, and we look for the highest point here and the lowest point, which is here. Okay, mark them out specifically, like as accurately as you can. It helps sometimes to have this magnet feature on, but I don't like having it on. Okay, so once you've marked out the daily high or low, we then look to see if price the next day taps or violates these lines in any way, shape, or form. So we can see here, this is Monday, the 20th of February. Okay, price came, wicked this line, which is also a very good sign, and it reacted significantly. Now, what do you notice? Okay, price wicked that daily high of Friday. This is now Friday, and this is Monday. It wicked it and reacted. Now, what did it do? It broke structure to the downside, all right? Now, once it broke structure, so we've now got a break of structure. How do we define that break? Now, it's important to know this, okay? Price moves up, down, up, and then breaks this higher low. So we've got higher low, higher high, higher low, higher high, higher low, higher high. Then it breaks the most recent higher low, okay? Now, it's important that you make sure you mark out swing structure so you know where your break will come and where your entry will be valid, okay? Because if you take it, for example, here, it may not be as valid as if you take it at the break of significant swing structure. Now, in order to determine this, I usually look on the 5-minute chart. So on the 5-minute chart, we're looking at swing structure, okay? Mark it out just like this if you're trading the strategy. Okay, so we then look for a break, okay? So we've got daily highs and daily lows marked out. We then look for, so this is step number 1. Step number 2, we look for a break of swing structure on the 5 minute, okay? And we've got that here, okay? This is actually the third step. The second step is looking for daily high or low to be broken. Okay, now it's important as well, it must not break and continue. So if it breaks and just goes like this, then we know it's gone. But if it breaks and starts to play around a little and come down, then we know that we can start to look. Okay, and this is all taking place on the 5 minutes that we are seeing all of this. Once we have, okay, these three, okay, now we've got the break of swing structure, okay, on the 5 minutes. We then drop down to the 3 minute time frame to look for entries. Okay, entries are on 3 minute fair value. Okay, 3 minute fair value gap. So what is a fair value gap? All right, I touched on this a little bit in the previous video. People were asking me to explain it a little better, but basically you look at the relationship of 3 candles. Okay, you've got candle 1, candle 2, and candle 3. All right, so this candle here has a wick. Let me draw it out for you guys. This candle has a wick, and this candle has a wick. We are looking for the gap between those wicks in the middle candle. So you look at 3 candles. If this space is not yet filled by any of the previous candles, there is a gap in between. Okay, that's the best way that I can explain it. I can create a full video around this if you would like. Just let me know in the comments below if that's something you would like me to do for you. All right, so we're on the 3 minute now and looking for a 3 minute fair value gap. Now, one thing about this fair value gap, right? So there is a fair value gap here, okay? Let me make this a better color for you guys so you can see. There's a fair value gap here. There is a fair value gap here as well, okay? Now, we are always looking for the fair value gap that is at the extremity, okay? How do I spell that? Let's ask for help. Okay, so you're always looking for the extremity, okay? And what that means is the one that is the furthest away from where price is. So this is the one that is furthest away, okay? So we will then place our limit order here and enter at this position. Our stop will be just above the high, okay? We then are going to look at targets. Now, our first target will always be the swing low, all right? This can also be a target here, but already we're at 4.89 risk reward, right? Now, ultimately, if you would like, you can also target the daily low. So remember, we're entering on the daily high, and if you can see, we're in a bit of a downtrend here. If we go onto the 15 minute, let's have a look. If it will play along. Right, you can see we're in a bit of a downtrend here. So there is a possibility that we've taken these significant highs here, and we could go to all-time lows and take out the lows. Now, that is something that you can play around with in your trading plan. I personally, I like to take my profit and go. So I would go break even at this point and then target these lows. I won't go for the all-time lows. However, if you do, you'll be gaining potential 13.8 risk reward. So if you're risking 1%, that's 13.8%. On a 100K account, that's $13,800, okay? So it's a significant amount. However, your chances of hitting this level is much more probable. So that is what I go for personally. And 4.96 risk reward is not something to be sniveled at. So basically, that's what I target. I get into the trade. And we now go break even on the trade, and some do take some partials at this level. And there you go. We took out the low. Now, from here, price really floors itself. And in fact, if you hold it overnight, it came all the way down to take out the lows as well. So that's an interesting trade. However, this is Monday, right? On Tuesday, that's when price comes to take out the lows. And of course, because these significant lows from the previous day, remember this here is a bank holiday. Now, on Friday, it created a very strong low, okay? And we had this marked out on our chart, and I took this live with everybody on TikTok, okay? Fully live. Now, we were watching price approaching this low, okay? It violated the low, okay? Price then reacted and came up, taking out these highs here, okay? And now we look to enter. So we've got the daily high and low. The low is broken. Break of swing structure here, okay? We then have a 3-minute fair value gap, right? That is here, okay? You can see the gap, right? This was not filled, okay? You can see everything up to here is very efficient, and it's right at the extremity as well. So we enter on this fair value gap, right? Our stops just below. I like to have at least 350 pips on the stops. And we targeted just before the highs here, before we went break even, right? We took partials at this point. So we made 300 pips. Okay, we went break even. Unfortunately, we came back to break even, but we had taken some partials on this position. So you can see exactly how you can take trades, very, very low risk, high reward trades, and have a high win rate. As you can see here, 13.92 risk reward from the high to the low. Like I say, I like to take it just to here. 4.86 is nothing to snivel at. And because the risk reward and the win rate is so good, this trade strategy is one of the best that I've ever used. So I highly suggest that you guys go and backtest the strategy and trade it on a demo account for a while and see how effective it is. This is basically ICT concepts broken down into a step-by-step form. It's one of his main methodologies, and it's extremely effective. So that's it from me, guys. If you enjoyed this video and if you learned something, you found value, please do like and subscribe. I would really, really appreciate it. Thank you very much, guys. Once again, if you go and have a look for me on Instagram, it is Millionaire Mindset Funded. You'll be able to find our page. We do have a group that you can join on there. But for now, guys, I will keep dropping videos just like this every single day, and we will keep teaching you new things in the Forex industry. Thanks, guys, for watching. Cheers. See you next time.